Welcome to the KISS Investing Week in Review. I know we're all expecting fireworks, and no fireworks yet. We have a lot of news this week. We had the debate, we had economic news, we had stimulus botching, stimulus deal on, stimulus deal off, and guess what? Not much action, which is kind of disappointing for us traders. Now, what we are seeing is a lot of debt. The Fed is printing money like there's no tomorrow, and our money is in danger. Keeping cash is dangerous. So I'd like to talk to you about how to protect your cash in this week in review. Very well, stay tuned, and let's get to the week in review. My number one worry right now is the value of your money, of your cash. We're all sitting in some cash, and that cash is losing value by the second. Just take a look at the Federal Reserve's balance. Look at how it grew. It's grown up exponentially since 2019. Now it's up to $7.17 trillion. Just as a reminder, the US economy is around $22 trillion, and it's almost doubled in the last year. So this is a worrisome sign. The value of the dollar is going to go down, and we need to find ways how to protect our money. Forget about the S&P, the Nasdaq, if it's going up or down. We have to protect the value of our money. Now let's take a look at what happened with the markets this week. If you remember last week was a very boring week where almost nothing happened. Guess what? This week, again, nothing much happened. Last week, the Nasdaq was up 1%. This week, the Nasdaq was down 1%. And the other indices like the S&P, the Russell, and the Dow are pretty much flat for 2 weeks. I know. We're all expecting fireworks. We're all expecting volatility, huge moves up and down because of the election. And guess what? Nothing. No movement in 2 weeks. Now let's take a look at the year-to-date stats. Also, very similar to last week, the Nasdaq still killing it, up 34% for the year. The S&P up 7.5%, which is a very strong number, and the Dow and the Russell are flat for the year. Again, I know we're all expecting a big move, and it might happen maybe next week or maybe on election day. We don't know, but fasten your seatbelts. It's gonna get fun. Now let's take a look at the sectors within the S&P 500. You guys know I have been bullish on utilities for a long time, almost since the summer. And take a look, utilities are up 9%. Yes, 9%. The boring utility sector is up 9% for the month, and this week it was up 2%. And technology surprisingly was down 2.5% for the week, and also surprisingly the real estate ETF, which I still like very much, was down 1.7% for the week. Now let's take a look at our mandatory FANG look. This week Netflix took it on the chin. Guess what? Their downloads were down. People were downloading the Netflix app much less than before. Why? Because everybody has the Netflix app already downloaded. And the growth rate is slowing. The pandemic helped Netflix, Peloton, Zoom a lot, these type of companies, the stay-at-home companies, but not anymore. We're starting to see a slowdown, and Nasdaq and Netflix got hit very hard, almost 10% for the week. And this week, Facebook and Google, oh my God, they were ripping higher. Facebook up 6% and Google up 5% for the week. Now let's take a look at my anti-bubble position. We are entering a time of the year that the US dollar is going to rule. If you guys see the US dollar up, then commodities are going to be down and the stock market is going to be down. And please take advantage of those opportunities to get invested in things that will protect your money. Where can we buy stuff that can protect our money? We can buy gold, we can buy gold miners, we can buy TIPS, which are inflation index treasuries, we can buy the SHI, which is 1 or 3 year treasuries, and we can buy commodities. And of course, we can buy utilities and real estate. Now, everything else is very risky right now. If you want to risk it to get the biscuit, then you can buy the Nasdaq, the FANG stocks, and the high-flying stocks. But right now, I would take advantage of any opportunity to start building a bigger and bigger position in stuff that will last if the dollar gets devalued a lot more. This year, the dollar has been totally whacked. That's why gold is up so much. Gold is up 25% for the year. Gold miners, 32%. So take advantage of any down move in these type of commodities to get invested. I am also want you to recommend a Michael Saylor, a billionaire who believes in Bitcoin like crazy. He was invited to talk at Hedgeye, which is a very, very solid company with Mike McCullough. And the billionaire Mike Saylor gave us his perspective why we need to invest in Bitcoin for the long run. Michael Saylor, as a billionaire, he likes Bitcoin more than gold, more than commodities, more than other stuff. And I invite you, I'm going to put his video link below, to watch. It's a 1-hour interview, very interesting, and he makes a very bullish case for Bitcoin. And the Bitcoin ETF is coming soon. And of course, you can always buy Bitcoin with a future/BTC. Thank you very much for watching the Weekend Review. Remember, if we can't make money, we have to protect our money. So that's our job this week, protecting what we have. If you want to learn how to become a millionaire or improve your financial habits, on the link below, I have a free video course for free called Permanent Millionaire. Hope you enjoy it. Also, if you want to open an account at Tastyworks, please link below. And if you found this video interesting, consider sharing it, clicking like, and subscribe. Thank you very much. Good luck trading, and one more week without an election. Remember, you gotta risk it to get the biscuit, baby.